Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the week of March 6th. Now next week we do have some important economic news releases. We have the jobs report next Friday instead of just the first Friday of the month, but it's pushed out to next Friday. And we also have initial claims on Thursday. These two kind of job reports, and ADP probably midweek. These job reports are the thing that the Fed is looking at right now. So this is going to be a major week on news. So we're going to understand that. Now, can we run into that? There's so much I want to discuss in the HPS watch list video. The first thing I want to do is say welcome to the new members. If you're watching this video for the first time, and if you're not, there's so much I want to say. Lots of times we say it on the air and stuff, but then after when I do my research on Friday and send it out for the next week, there's just a lot, and I don't want to make videos too long. It's not worth it. But again, there's so much good information I want to get out to you, and there's so many different aspects of the market we want to talk about, and there's so many different traders out there. Some of us like to do scalping the futures or trading futures and like that, or we have day traders with stocks, early morning poppers, or we have swing traders and high probability setups. So these are the three different kind of directions that we're always being pulled in, and I want to be able to focus on all of them. So I sometimes put it all in one video, sometimes I'll split it up. I wanted to start off with the ES today because the ES is always there for you. The ES is something that all traders can trade. Because it bypasses the pattern day trading rule, so you can continue to trade it all day, and that's great. And there's some really good ways of trading it with the micros now, which you don't have to put a lot of money into. So it's a good starting point if you want to start trading futures. And then trading futures, we here kind of simplified it. We only looking at a few different setups, but watching today's market and seeing. I was watching it. Paul was on most of the day, but I was watching the trade room, the chat room, and stuff, and watching people trying to short this market. It's very difficult to short a trending market. And I was just talking about this yesterday. There's good times and bad, good times to trade the market, and when you find those good times, you have to strike. It's like when your cards are running hot. That's when you have to bet. Because sometimes it's very difficult, and you have to determine what type of market conditions you're in. A very bullish trending market, up or down, it doesn't matter, or a chop fest, or maybe something totally, random that you can't even figure. It's just a hard market, and the easy ones you start to see. That's what we like to guide you through. I like to guide you each day, looking at the setups, but not all setups are equal, and trading is very hard. Even though we say that we have kind of an edge because we have some of our indicators point out things, you still have to have the skill set to get into these, not to chase them, have the discipline to take them off, and all this extra, I always call it emotional, baggage that we carry around as traders. We're all different. We all have different personalities. That's the truth. That's why some people say that ladies or females are better traders than men. They're more, I forget what the term was, but they're calm. They're more focused. They know how to take profits. They don't gamble as much. They're conservative, but it's just something about that. How they're wired. And we're all wired differently. You have to control your weaknesses. You have to determine what your weaknesses are, and then to figure out a way of controlling them. And here I'd like to teach, a methodology that kind of puts us in a box. Puts us in a set of rules. And I call it I kind of clone it the business plan. And this is your business plan. Trading is your job. Trading is your job, and if you had a problem on your job, you go to your job manual. And the HPS or the HPS methodology is your job manual. And it tells you what your product you're selling and how you're making that money. And everything else should be done. That's the best way to sell your product. That's the best way. Everything is and if you follow that guidebook, you're going to make money and you'll be successful. But not every trader could follow it. They're going to be sitting here and trying to trade the market, even if they don't have a good setup. They're going to say, well, this market's too high, or I'm going to try. And it's gambling. It really is gambling. Unless you have a setup that has been proven to work over and over again, and the odds are in your favor drastically, then it's gambling. All right. And that's the key to being successful. Not over trading. Over trading. Trading too much. Most times you're not going to have a good market to trade. There's a lot of algorithms out there, a lot of behind the scenes, especially with futures. They see the market drop here hard aggressively in the morning, and then it bounced back up and went higher, and then came back down. It's very, very whip. And if you're not seasoned, or familiar with this, or maybe you are familiar with it, but it's still, you just don't know, because the market is so unsteady right now. There's a lot of negativity out there, yet there's some of us are more positive, some of us are more negative. It is really a pick'em market right now. Anything could happen, and going into next week we might see that. We might see a total reversal. But we're going to talk about futures. So futures is important. I think everyone should be able to have a futures account, trade the MES. I love doing this during the day, because it's easy. Not a lot of pressure on me. I take very small contracts, but I apply the HPS methodology, and that's it's important to push that button, get in. Not just at one point you got to take the bat off your shoulder and swing. So this is a good time for us to, and that's what I want to do. I want to identify them, and if I'm identifying them, I want to take them too. But again, the key is to be successful. You have to be disciplined. That's one of the prerequisites. Well, I'm not even going to try with that one. That's one of the qualifying skills you need to be. You have to be disciplined. You have to be patient. Disciplined, not to chase. We typically, if we see a divergence here, I'm going to go through the MES right now. Starting this morning, I want to go over, our 3 real setups, maybe 4 setups. I want to go over what we're looking for and see how they work out. All right, let's just do that right now together. All right, this morning I got in, and Paul was going to get in a little later in the day, like 11 o'clock. So I covered the morning here. And early in the morning, we were able to recognize this channel, at the beginning of this channel. I think at this point, I put it in. And yeah, this is where I got into, I came in right around 7:45, 8 o'clock. And we put this channel in after we got these 2 pivots and this long pivot down here. And we bounced up and we started pulling back. And then we started this. There was a candle here that was really a divergence. It showed up on the rock bot. I can't really move the screen over to show it to you, but actually could put the rock bot on this screen and back test it. But it's just an area that showed up as a rock bot set up there, and that was about 8:20. And typically when I'm trading, and there's another nice candle. I'm locking in profits. I'm pointing out the entries, getting in and getting out. Of course, we could look back and see how great the entry was afterwards, because we can see the divergence and the downward channel and looking at it. And I do this all the time, and I bang my head against the wall. I'm like, why didn't I just stay? Why don't I take more? And it's difficult because we're covering so much, and I have stocks that I'm watching, and we're doing short-term flatline poppers and stuff. But this is important, and we have to separate this type of trading and get, be more focused on it, because the opportunities there's such great opportunities here. All right, they're great opportunities because the criteria is so perfect. It's not, you can't, mess it up. You can't. You could be wrong, but you can't mess up the criteria. The criteria is easy. Stage 1, stage 2. Stage 1, stage 2. All right. I'm not going to go into this because that's one of the first things that you should learn with us here. And so if you're actually a new trader with me, and are not familiar with the methodology, you need to reach out to me. All right. You need to reach out and say, hey, I'm pretty new. I don't understand. I didn't know about the criteria. I don't know about the methodology and the steps. Just reach out to me. Send me an email, and I'll send you this thing, and maybe we could actually do a little extra work on it, and I'll catch you up to speed. The but this is the criteria. Buy sides. There's two stages here: stage 1 and stage 2. And I wrote them down here, and I told you exactly what you need to do, what you need to see here for each thing. For first diverge, you want to see a pretty quick move for the price back down lower as the stochastics hold above the 20 line, and then turn up, put in a higher low on the stochastics. And then I also say that these other things, if they line up, are even a bonus. It's a bonus. It's the pattern, the candlestick, are two of the best things so the criteria is there. So what my point is, there shouldn't be a problem with the criteria. Not taking the entries is understanding and feeling good with them. All right. Here's back here. So we moved all the way up here just to get up here and there. About 9:10. This is even before the market opened. And I remember calling this one. I didn't get in it. Oh, I might have gotten it. I had 2 accounts, so I'm going to have to check my other account. I think maybe I did get in this one. I have to check. Let me see here. I wanted to show you the divergence. You have you have the high, then you have the higher high, then you have the reversal candle, engulfing pattern. After a big move up here, the divergence is super clear. It's one you can't, again, something you cannot unsee. It is a divergence. And look at the move off of that. All right. It wasn't a great divergence here, but what I call a closing price divergence is where the closing prices tend to come in line. So you can see all the candles shooting down here, but the closing price is right about there. And you can see there's some candles and shows. So we could get down close to that closing price, but a higher stochastic rotation like it is right here. Then you have a better chance. But that took off pretty fast, and that moved up pretty fast. But anyway, I'm not saying that would have been a perfect one, but it also was kind of a quad rotation too. We just started to get oversold, and it was a divergence. So it was a really great pickup. I believe that was a VWAP pullback too. I'm not even where this one was. Then here was one I did take, and I did get stopped out of it. I was looking at the, what was I looking at here? I think I was in right here off the 20 period moving average and was getting rotated back down, but we sold off a little bit lower. So I had a very tight stop on, and I did get stopped out of it. But, there wasn't a setup there. There was not a setup. It wasn't a divergence. And that even myself, I always, again, 20-something years of trading, sometimes it's hard because the action's in the morning, you're pulling back, you want to try other techniques. There are techniques that you always have to try, and once if you're saying, oh, it'll pull back here to 20, I like the rotation, fast rotation, I'll get in at the 20, but it was holding for a second and then it dropped fast and then it rebounded. I mean, if I held it there and faced the downward drawdown and then the move back up, it would have been a hero. That was a pretty good entry overall in the whole day. But that's tough. That's trading. And then Paul ended up taking over. And the market was pretty much strong all day. And like I said, I was watching some of the traders in the room. And I don't know how they did. It's just the market. I just did see that bullish trend. And I was hoping that we remember saying, when we do have that bullish trend, don't fight the trend. Take advantage of it. This is the time you need to be really, again, being more aggressive on the long side because you have such a strong trend. We haven't had that in a while. And every so often we'll have a real good trend market. And you can see the trend market by this, the stochastics on the 60 have been kind of hanging up here. And, we never put down a perfect, like, how long should it be embedded, or in this case, this is the 60-10, which represents the 5-minute time frame with a 9-3. And I know that's a little complicated, but I would say 3, 5, 15 minutes. I'd like to see this hanging up here on the 60-10. That represents 3 5-minute embedded candles. Now, we never really talked about that kind of unheard rule and stuff, but these are the things that you just kind of keep an eye on. If you see this there's really good strength, and if you do notice the strength and the crickets and there's not much of a pullback, and But the market's tough because it's been giving back these, but overall it was a nice pullback. I'm just looking back here. The other setup we tend to like to take is that quad rotation, where we'll have a rotation down on the 60. This was almost a quad rotation. Well, it wasn't really. This was a little fast. Let me take a look at the other chart we have. Because the other chart I have is, I really read this other chart really well. My MedVed charts. Let me open this up a little. All right. So that was the early morning divergence. You can see that. That candle came down. This was a much higher stochastic, and that was the best entry of the day on that pullback. Here was that divergence up here. A nice little pullback. And yeah, I could see these things very easily. And look at this. This was very close. We had a 9.3, just about a 14.3, not the 4.3. We didn't have a quad rotation there. Very bullish trends. Sometimes you're not going to get that signal. But I love the signal in a bullish trend. I mean, this was very, very close. Look how close we got on this. We almost got oversold there. It was kind of a divergence. And I think I called this one out. It was kind of a mid-pattern. Well, this was at the end of the day. I did not call this one out. This was right at the end of the day. I wasn't even here. My son got his license today. So I was, that's a nice divergence. That's a nice pullback. The only thing I don't like about this is the time frame. It's going at the last half hour on a Friday. But when you have a downward channel like this, you're always looking for a break out of the channel with a divergence. If a divergence happens in the channel, if you have a defined channel, meaning a 1, 2, 3 pivot area, 4, something that, you got eyeball and it looks pretty good. You have a defined channel and you have a pivot in it 80 to 90% of the time. Very high probability you're going to break out of the channel that you're trading in. So you're always going to get the best entry on the lower part of the channel because you have the divergence. You're buying the weakness, and that's how the divergence works. And then, well, look at that. I mean, that was just at the end of the day. And it's funny how that works, right? So there wasn't many great opportunities unless you just, you went long and you went home and you kept it on. You came back at the end of the day and you took your position off. How rare is that? How rare is that? I mean, it's going to be great for IRAs today and stuff like that. So that was the futures. I'm looking forward to taking this to the next level with our MES trading. We have a lot of great MES traders in the room. I want to dedicate a live, more of live trading to this going into next week. I want to try to, I have something planned. I'm going to try to announce it next week. But I have to get my thoughts together on how I'm going to do this before and it's just going to be, it's going to be more focused on MES trading. All right, that's basically what it's going to be doing. More live trading, more of a focused area where we could watch it constantly. You're always going to have the chart up. I want to force myself. I might use the Rockbot portion of the Rockbot also to do my live trades because we're jumping around, but I want to have you guys access to my live chart, my live trading chart at all times. Because it'll be faster to be able to get into these things instead of, because mine's usually covered up and I'm looking at other charts for questions and stuff. But I have to focus a little bit more on that. I'm working on how to do that. I hope we could do that next week, starting off on Monday. All right, now the other section here. Let's talk about the markets. Well, this is a section we call the market radars. Typically, I do this in a totally different video in itself. I always start the HPS watch list video with a market radar. And market radar is taking a look at the big index. Maybe sometimes we look at both, the NASDAQ, the S&P, or the Dow. And the overall markets. And I use the Standard Poor's, the S&P 500 as our main benchmark index to track. All right. But we could always chart anything you want. You want me to chart something, I'll chart it. I've talked to them blue in the face, red in the face, whatever color you want, in the face, about the October lows and the January lows and this underlying trend line. Now, I know a lot of this trend line is pretty obvious. You can't help but know that people are watching this. And I'm not, pointing out anything new. If you know anything about charting, this is just a standard trend line. Now, there's other lines that we want to pay attention to that a lot of traders won't pay attention to. We trade if you break down through a line, we come back and test it. Trend lines that we break out of and then come back, we test. There's a couple top of the candle versus the close of the candle. Two different lines. Sometimes the close, I like to use the close, and I also like to use a retest. All right, so I consider this as one of our major breaks out of this blue channel, which we broke out of. And we came up, there was another trend line here that goes out and based off the candlestick highs, and that actually played a part. So now we came back down to it in the main trend line underneath it, and this is what we put out this week. It says this is a major break, make or break line. And when it came push to shove, I believe that line was going to hold. You would think this line is going to hold. That's why that line is, we always look back and say, wow, that was pretty obvious. Perfect trend. Look at the trend. Now we're looking back at the trend at 4 points. Next time we're going to be 5 points. These trends, there was a lot of fear here. I mean, it could have went either way. There was a Fed speaker that came out and kind of jump-started this right at this level. So a lot of people in the room, taking credit for this. A lot of charts going through the room, and I think everyone, has this area in mind. All right, trend line retracement, rise in trend line, X marks the spot. Oversold here. I'll add my 2 cents. I love when we get the oversold 60, which we had yesterday, the day before, on the 2nd yesterday, and an oversold daily on the same time frame. So we had an oversold daily and an oversold 60. You can see, and we had a daily divergence. That is that's another big thing. A daily 60 combo, a 1-2 time frame setting up exact in sync. That's what we call, these are in sync. That's what the kind of quad rotation is. But this is a bigger time frame. This is the 60 daily instead of the 5, 1, 3. So we had everything. It was obvious. Now, the big question is, again, we do have a big report next week. A big report on, Wednesday, Thursday, and Friday. We have a job report. Wednesday, we have claims on Thursday, and then we have the non-farm payrolls and unemployment and et cetera on Friday. And more job reports on Friday, the big ones. But there's so do we move higher into this? The daily has a nice little jump to it. I mean, my take on this, we are a little extended on the 60 period, but we're very extended, 97, and that tends to be bullish. All right, that's an embedded bullish, very steep. The more intense or more embedded it is, either the upside or the downside, the more sustained that rally is going to be. It's not an overbought or oversold, but in this case, it's really strong. We'll see. We'll see what news comes out over the weekend. We'll see what type of news is in the morning on Monday, because certain stocks get hit with news, they're weighted in the average, and that could just kind of overturn the apple cart. But if everything left, we go into next week as we're going right now, technically speaking, everything looks great. I'd pay attention to this next level here. The next level here, 40.85, and that's even a gap. Whoa, look at that. Whoa, we got something going on here. That's nice right here. Let's mark this down. Wow, that's right. Everything lining up again here. Wow. You know what? Before I forget, because the HPS watch list with the stocks is going to be a separate watch list, because I'll break these into two. What level is that going to be? Before I forget, this is the weekend we're turning the prices back up on the lifetime memberships. I know you guys are all members, so you don't have to worry. But if you want to take advantage of the lifetime membership, so you don't have to, it's a great deal right now. Includes everything, the School of Stock, which we're spinning kind of off a little. We're raising prices on a lot of this stuff. So if you're a lifetime, you get all that for free. Just take advantage of it. For the end of the weekend, Monday, the price will be up to between $1,500 and $1,700 for the lifetime. Right now, it's $699. So and we're going to keep it up there. We're going to be, like I said, we're going to be advancing the site going forward. So there's my advertisement. We don't do that much, advertise about the site, but that's going to happen. And I highly advise taking advantage of the sale this week if you're not a lifetime member. All right, so we are going to watch this level right here, 40. We'll call it 4,070 to 4,090. We give ourselves enough. I mean, honestly, you're not going to hit it per. That's going to be 4,090 up there. This is going to start coming down. We're not going to get right up there, so kind of measure it out. But that gap over here is going to be interesting. That top part of that gap is 4,090. So just remember that. That's our level, and that's 30 to 40 points higher. Right? 50 points, 30 to 50 points higher. We were up 68 today. That could easily happen on going into the jobs report. So we're going to run into eventually we're going to run into this downward trend line. We'll see how it reacts. Do we have what it takes? It looks like it's a perfect target. It really does. But again, the whole thing could come unraveled with the jobs report. If it's going to be another hot jobs report, it is going to hit the market. If it's a weaker jobs report, what they expect, that's actually going to probably rally the market. It all hinges on this week's economic data. Last thing here, we'll look at the excuse me, talking too much and not breathing. The weekly still has that negative little, just directional flow to it. We don't put too much into the weekly because it's such a long time frame, but we like it when we're at extremes. All right, well, now we're far away from the extremes here. This could push back up easy, and we could be starting chopping around here like it did back here. It pulled back and then popped and then dropped and pushed back up and then pulled back and popped, pulled back halfway here and then popped. It's hard to say. I don't put too much in the weekly. I do put a lot in the daily. I do put a lot in the 4-minute, the 60-minute. And I do put a lot in the divergences that are setting up on my posted divergences. The divergences are key, and I have a scanner that scans all the S&P 500s. And when we see the divergences reach that 30 points, it's my greed fear index, my DayTraderRockStar indicator. It's the divergence indicator. When I see about anything above 25, 30 divergences on my scans, on daily divergences, that means about 30 of the 30, at least 30 stocks, 20 stocks, 30. That's a lot of the S&P 500 are setting up in buy divergences. That tends to be a very bullish signal in my studies. When I look back at this, I say, well, we see the trending when things start to and I'm going to go through those divergences. All right, and these divergences are already. When we have a divergence, we might as well just put that one down on the watch list. I might not go on the HPS because there'll be, some of these stocks won't trade, but I'm gonna go over them right now because they're important to see. All right, and so that's going to be the end of this video right now because I'm going to probably send this one out just to kind of get us ready for the ES. We talked about the market radar, and then I'm going to work on the high probability setup for the members, and that'll be coming out right after this one. All right, we're going to break them both down. So again, if you're this will probably go out to the public, so if you're new to Day Trading Radio, head over there, daytradingradio.com. We do have a free trial, no credit card or anything. Just go to www or go to dtr.tv. That's dtr.tv /free. and I'll give you 10 free days in the system. You get all our trade alerts. You get into the chat rooms. You get into the everything. You get a lot of the education. You don't get the high you get the high probability setups. I'm going to say you don't get the school of stock. That's for lifetime members, and all the education goes along with that, and some other things. But hey, become a lifetime member. That's even better. All right, we have hundreds of them. See you guys. See you guys Monday morning, 7:45. DayTraderRadio.com, and HPS watch list coming up next for the members.